activities in the bonds market are calm as market players grapple with funding gaps, and traders at UBA say that they expect sell-offs to continue in the interim. And I have Bankole Odusanya as the head of fixed income trading at UBA. He joins me now for more on this. Thank you so much for Bankole. Can you speak to first why you're expecting to see some more sell-offs in the market first?
Okay, there seems to be some liquidity squeeze, especially on the bonds end. And what we are seeing is that some bond dealers are rather not picking up bonds at 13.1 to 13.5 levels, where yields are expected to inch up. Interest rates are expected to inch up on the long-term end. So most dealers I've spoken to expect that at some point in this H2, we expect that yields could hit 14. That's because of the sense of borrowing that they expect from the DMO. Of course, the external reserve notch up that we are seeing from the SDR is also going to be a game changer in that cash is not being received, but at least it helps the external reserve rating and the way it looks and the ability of the government to lean on that to raise some external debt. So we expect the DMO to come out with something in the next few weeks.
Definitely, we're waiting to see how that also comes out there. But on the treasury bill space, what are we seeing play out there?
Okay, we've seen a bluish trend this week, and there are two key factors driving that. Number one is that there was an OMO maturity of around 19 billion this week, but there's been no OMO issuance, and we do not expect OMO issuance this week. Like last week also, there was no OMO issuance. So that matured fund is chasing the NTB. So we have seen deals at 7.7% today of 1 year bills that were sold at 8.2 at the last auction. So we expect that at the next week's NTB auction, yield will go from 8.2 levels to 8% and even possibly 7.75 because the secondary market is trading there already. Now, the reason why we expect that to happen is because the NTB on offer next week is below 30 billion. And the amount of funds that have matured, system liquidity today opened with 140 billion. So with very limited alternatives, the NTB looks good because the effective yield of the 7.75 is as high as about 8.5. And we're thinking that the demand will be very high, like we're seeing in the secondary market going into next week.
All right, still looking at key factors that have happened in the past week. It's a full week now since the central bank made that announcement on the new FX policy stopping the sale of FX to the Bureau de Change operators. You know, when you look at how things have played out, do you think that uncertainty around the air has speeded out already?
Oh yes, I believe the banks are showing capacity. We've noticed that most people who have approached the bank for FX are actually being paid FX. With more documentation compared to what was happening on the BDC side of things. So basically, we have seen that the banks are showing capacity in as early as 1 week. We expect that they would expand their ability to deliver nationwide. And then the central bank in itself actually delivered on its promise of pumping more than 200 million into the system. So that confidence with the news of the SDR coming from the IMF also helped douse the initial knee-jerk reaction we saw when rates climbed to 520, Naira climbed to 525 compared to $1. So right now, even today, we have had the rate is between 503 and 508. So we expect that going into next week, it may touch 500. And once there's a break below that support of 500 to like 495, then you expect that people who held this currency could actually start selling, and this could help exacerbate the strength to the Naira.
Finally, before I let you go on liquidity, what's your outlook for the month of August?
It's not as good as what we saw in July. There's just 49 billion coming in from bond auctions, bond coupons, compared to last month where we got 500 billion bond maturity and another 400 billion coupons from several up to 8 different bonds. So this month is just one bond giving us that. And then going into September and October, you see some more. But August in particular is expected to be tight in liquidity.